prices, Griff.
Speaking of underpins to price, let's go to Pete McGuire. He's in Berlin. It's top of the morning to you. We'll say our Wiedersehen at the end of this show, but XCM Chief Strategist and Chief Executive there, Pete McGuire. Welcome into the show, Pete. Balmy weather, but not a balmy outlook on the gold price, at least if you put the last two sessions together. What's going on? Just as we thought we were looking and sitting pretty, in US dollar terms and in A dollar terms, it was a 1-2 punch.
Well, exactly. Well, good morning. Well, good afternoon, Carson and Tony. Welcome from Berlin. Look, but quite simply, it was probably a little bit overbought. No doubt that little bit of a correction is a wake-up call for us all. Little brother silver seems to be still gaining a little bit of momentum there and up the best part of 35-36% since June 1. So markets sometimes gallop ahead of themselves, and I think that the gold market's just having a little bit of a breather. I expect it to move up further over the coming weeks.
Is this just a store of value argument again in periods of fear and loathing? If that is, are we going to see a further up movement in other potential store of values like silver and the like?
Well, exactly right, Tony. I think, with where it's going over, this 6 months, we're up the best part of 50-odd% of silver. It's moving very, very quickly. You've got to be careful with it, naturally. But I think it's a little bit of a wake-up call also. The other side, that long-term average is now at about 66 ounces of silver to 1 ounce of gold, and that's about close to our average over the last 30 years. Now, it was certainly out of lockstep going back over the last couple of years. We got up to nearly 80 ounces to 1 ounce of gold. It's closing on that long term, and in turn, I think that there's going to be a push. Economic conditions globally aren't that rosy, and I think there's more upside for both of those metals.
Because that's intriguing. To your last point about the economic headwinds globally, silver would traditionally be considered that input for a number of industrial usages, catalytic converters, that sort of thing.
Absolutely.
Now, if you are getting, though, a pullback in projections on growth, why are you expecting to outperform? That's question one. And question two to it, Q1 of this year, the big concern was China. Gold rallied for the best quarter in nearly 30 years, but silver lagged. Why will this next test be any different, that silver will underperform its gold counterpart?
Okay. Well, I'm not expecting it to rally for the next year or two, but I'm expecting over the next couple of weeks. And in commodity trading, that's a long time. First off, I think there's too much momentum, Carson, with the silver trade. We've got around about 65% net long positions on COMEX. That's unheard of as far as open positions. So it's not just the market saying it, the traders are piling in on that one-way trade. Yes, it can get a little bit nasty when things turn, but I think that there's enough momentum pushing forward in the short term to show a little bit more price movement to the upside. As far as gold's concerned, I still look at the UK pound, and it was up around about 2%. So whilst it did fall in US dollar terms and Aussie dollar, the other side is that it's still providing a safe haven and movement in certain currencies.
Tony,
that will continue over the next couple of weeks.
Peter, seconds away from losing the line. Your biggest impression on the ground in Europe is what so far, in a sentence?
I think overall weakness, Carson. Overall weakness.
Okay. Maybe there's opportunity, though, in that weaker sentiment story. Thank you so much, Pete McGuire from Berlin, XCM Chief Exec.